Hello guys, my name is Amon. Hope all of you are well. So in this video, we are going to look into factors to consider when you are making loan applications. If you are in business, for example, and you want to expand your business, you may lack enough money to expand your business. So this may force you to apply for a loan. Another reason is if you want to purchase an asset. For example, you want to buy a car. It can be a personal car or a business car. This may necessitate you to apply for a loan. So looking into factors to consider when you're making a loan application, one of the factors, first thing you must do is to check your CRB report. So how is your credit score? So credit score is simply your CRB report and how is it looking. So you must check your CRB report before you approach your bank to extend your credit. And in your CRB report, there are many things your banker can check from your CRB. One of the things is how many facilities are active in your CRB report. You may already have loans that you are servicing, and these loans will reflect on your CRB report. So from this, your banker can assess your ability to accommodate more loans. So it is one of the things that may eventually affect your loan applications. Another thing that you will find in your CRB report is the number of the amounts of loans and the maximum amount you have borrowed. So if all the loans that you have borrowed will reflect on your CRB report, any amount that you have ever borrowed will be in your CRB report. So your banker will be able to know every facility that you have ever borrowed, how you repaid, and the duration of that loan. Another thing is the number of days your loan stayed in arrears. So if you habit of paying your installments in arrears, if you, for example, you are supposed to pay your loan on date 10 of every month, but for some reason you pay your loan on date 20. In the CRB report, it will show that you stayed for 10 days before you made that payment. So these things will affect your applications. It may make your bank to reject your facility or reduce your loan. So CRB report has a lot of details that will affect your application. So it is a good practice that you always check your CRB report to see how it may affect your loan applications. It will also help you to identify mistakes, because it is not always that these banks will update their data with CRB guys. So if you may also identify that your loan is not updated. If you may have cleared a loan with a bank, but it still reflects in your CRB report that you are still paying that loan. So it will also help you as a person to identify these errors and follow up for corrections. The next thing you may want to consider is interest rate. Now, this is everything, because it is basically the cost of your loan. How much are you going to pay on top of a loan that the bank has extended to you? If you are a business person, cost of anything, it is important, because if the interest rate is very high, you may want to reconsider. It is always good to always compare the interest rate bank here is offering compared to different banks. So if the bank is charging a high interest rate, you may want to see what bank B is charging, so that you can make a decision. So it is good to check the interest rate before making an application. Another thing is loan terms. So these are things like processing fees, insurance, and whatnot. So there are charges. The bank will charge you after approving your loan before making a disbursement. For example, if you applied a loan of 100K, you will find that in your bank account, after disbursement, you will not find that 100K that you applied for. It is normally around 93K. So this will tell you that the 7K difference is all these charges that the bank is charging you, ranging from processing fees, insurance, commitment fee, chattel fee, and so many other things the bank is charging you. So you may want to know how much in total your bank is charging you, so that you can make the decision. You can also compare with other banks to see the difference before you take that step of applying for a loan. Last but not least is your ability to pay the loan. Now, this is where many people overlook, because your bank tells you qualify for a loan of 1 million, but can your disposable income accommodate the monthly installment for that 1 million? When I say disposable income, I meant your income after making deductions of every expense in your business, or if you are an individual in your household. So expenses are things like paying your rent, and even if you have kids who are schooling, school fees. And if you are a member of a SACCO, for example, your deductions for SACCO shares or deposits, and many other things that will fall into that category of deductions in your income. So there are many things, including electricity bills, water bills, every deductions that apply to your household or business. Now, how much will remain after making these deductions from your income? And so that is your disposable income. So when you are applying for a loan, you must always consider that disposable income. If it will accommodate that installment, that additional installment that you are about to add into your deductions. For example, if your disposable income is 50K, after everything else is considered, and your monthly installment for a loan that you are about to take is 30K, then we can say that you have that ability to repay the loan. So in that case, you can go ahead and apply for a loan. But if you find that you are stretching too much on your disposable income, you may want to reconsider making that application, or maybe reducing the amount in a way that it will be accommodated by your disposable income. Or even you can negotiate for an extended period of loan repayment. So these are things that you have to consider when you are making loan applications. So in our next video, we will discuss more about CRB report. So thank you for watching this video, and if you are new in this channel, kindly subscribe, like the video, and share with your friends. Thank you so much, and cheers.